Hi there, welcome to GrainTV. It's Tuesday, November 10th, which must mean it was a USDA report day. Unfortunately, USDA's number did little to change the bearish sentiment. Let's take a look at the grain hedge trading platform and see where we closed. In Chicago, corn was off 7 3/4 cents, beans off 10 3/4, and wheat, another sharp down day, losing 11.5 cents a bushel. The news today from USDA was very bearish. Nothing that really got this market changing its bearish sentiment. All the way across the board, we had stocks that were higher than expected. We had production that was higher than expected. Not hugely higher, but enough that it really just continues to deflate prices and keep this market in a defensive tone. Let's take a look at the USDA's production numbers on corn and beans. There we saw corn at 13.6 billion bushels versus 13.57 as expected by the trade. We saw yields that were better than expected at 169.3 versus what people were looking for around 168.4. Same story for beans, higher than expected yields at 48.3 versus 47.5, which led to better production. Now on the demand side, that was a different story. We saw corn seeing some revisions lower on demand usage numbers. We saw ethanol down by 75 million bushels. We saw exports down by 50 million bushels. We have been talking about the pathetic export pace for corn for the first part of this marketing year, so that wasn't a terrible surprise to us. On the ethanol side, a lot of that lower corn use for ethanol is a result of more intensity of milo being used as a feedstock because of the sluggish demand from China. So all of those things combined led to a very sharply higher number. You can see corn ending stocks coming in well above the even high-end expectation of 1702. In beans, they did actually revise higher the export numbers. That's not terribly surprising because we've been doing fairly well. Not as good as last year, but then again, USDA had already factored in a big drop in exports. So I'm in acceptance of their slightly higher number. We'll see if we can continue to hold that pace. So they raised their export expectations by 40 million bushels, raised their crush by 10. So we didn't get quite as big a jump in ending stocks as what it potentially could be given the sharply higher production. On wheat, this was a situation where again USDA chose to finally observe the fact that we are having very pathetic wheat exports. They slashed exports by 50 million bushels, which was basically the revision to ending stocks or carry out for US wheat. In the international front, the one sort of surprising thing is they did not lower Australia's crop by that significant amount. They only dropped it from 27 million metric tons down to 26, where most people are looking for that crop to be somewhere in the 23 to 24 range. So that potentially could be, a bullish trigger. But again, that's not a huge factor at this stage of the game, where we have very ample domestic supplies, we have very ample global supplies of wheat, and in the case of the US, we just continue to see very, very little business. Egypt continues to buy from our competitors. The dollar continues to be strong, which is detrimental to our wheat competitiveness. So all in all, it just looks very grim for the wheat market. Let's take a look at soybeans and let's take a look at the grain hedge trading platform to see what the chart action has been showing us. We've been talking for the last few weeks about this 858 mark on January beans, where it's been very important support levels. We traded it in August, we traded it in September, all as a result of crop information. And today you can see we actually traded below it for the first time on this fresh news. Now what's interesting is to take a look at the 5-minute bar chart on that January bean contract. You can see in the middle the big red fall. That's the news that was announced by USDA, giving us about an immediate 10-cent knockoff on price as a result of that news. And you can see we struggled lower all the way down to 850, but we seem to find some new buyers at 850, or at least some covering going on at 850, which marched us back up by the settle to around that 858 mark. So continue to watch 858. We've been talking about it. I think it's still a pivotal point. Are we going to trade higher above 858? Have we digested this news significantly enough to continue to push higher, or are we going to continue to push lower and test out new lows? So that's all we got for today on GrainTV. Join us tomorrow. We'll be talking about EIA's ethanol numbers, and by all means, trade safely.